Another coffee hour where we're going to be going over quite a bit of news here, all specific to finance, investing, and things like that. So we got a lot to cover. There was a lot. Another coffee hour where we're going to go. I got to stop that stream there. But yeah, it's gonna be a fun one. I think this should be interesting because there was definitely a lot of news that came out over the last 12 hours. Some of the big names that we cover on this channel or have covered in the past, specifically MicroStrategy. So this one was interesting. We kind of spoke about this, especially since we saw the writing on the wall about how it's been performing with earnings and all of that stuff. So the writing was kind of on the wall, but we'll dive into that, interest rates, markets, how they're reacting, and then we'll just get into a little bit of real estate at the very end. So let's go ahead and get started. All right. So from Business Wire, which is a Berkshire Hathaway company, MicroStrategy is now branded as Strategy. Okay. It is no longer a small strategy. It's now just Strategy. Strategy unveils a new name, a new logo, and an orange brand color. Okay. They have a new website, which we'll be looking at here in just a moment. And they also kind of split the company in two different departments. One is for their Bitcoin strategy, which entails not only notes but their common shares, and then they have their regular business, which deals in business intelligence and AI software. Leadership's also addressed an earnings call earlier today, or 5 p.m. Eastern Standard Time, and we'll be going over that. So basically, MicroStrategy today announced it is now doing business as Strategy. Strategy is the world's first and largest Bitcoin treasury company, the largest independent publicly traded business intelligence company, and a NASDAQ 100 stock. So from Michael Saylor, who is the company's founder and CEO, I'm supposing, executive chairman, Strategy is one of the most powerful and positive words in human language. It also represents a simplification of our company name to its most important strategic core. I'm going to butcher this, Anton de Saint-Exupéry said, "Perfection is achieved not when there is nothing more to add, but when there is nothing left to take away. After 35 years, our new brand perfectly represents our pursuit of perfection." I mean, that's a nice sound bit. It's a really nice sound bit. It's a really nice quote, actually. We'll see how this plays out. Fong Lei, who's the president and CEO of Strategy is innovating in the two most transformative technologies of the 21st century, Bitcoin and artificial intelligence. Our new name powerfully and simply conveys the universal and global appeal of our company and the value we bring to the strategies of our shareholders, customers, partners, and employees. So this is huge. Like, this was really, really big news, especially for a company like MicroStrategy, because, we're talking about AI. We've been talking about AI. We've been covering the whole AI thesis and why you should be bullish on AI and why you should consider AI for your investment. MicroStrategy is really bridging the gap between investing in Bitcoin, cryptocurrency, and investing in AI, right? Especially with their new AI suite or software suite, which we're going to get here in a second. But I covered this in one of my earlier videos that, under this current administration, under the current Trump administration, he had listed a focus on crypto deregulation and AI deregulation. So these are great tailwinds for AI and Bitcoin. So MicroStrategy adopting this is going to be very, very huge and a very good tailwind for the company. But we can't forget that, yes, the company's stock price and the company is pretty much tied to the price of Bitcoin. So if Bitcoin rises, MicroStrategy is going to rise. But if Bitcoin falls, MicroStrategy will probably follow suit with that as well. And we also have to keep in mind that the company is not making that much money. It's not making that much money as a tech company. So let's dive into MicroStrategy's new rebrand. All right. So this is Strategy. We are the world's first and largest Bitcoin treasury company and the largest independently public traded business intelligence company. All right, pretty huge. They still have the same ticker MSTR, which is good. There was a request for comment if MSTR is going to change their ticker to something else. So we'll see what comes of that. Basically, this is what Strategy's new mission statement is. We provide cloud-native AI-powered enterprise analytics software to thousands of global customers and leverage 35 years of software expertise to explore innovation in Bitcoin applications. This is actually new. Bitcoin applications. So we're probably thinking like, peer-to-peer or some type of, software that basically allows end users, customers to purchase products and services with Bitcoin. So this will be interesting. I don't know what other applications can come from Bitcoin other than using it as, digital currency. So we believe the combination of our operating structure, Bitcoin strategy, and focus on technology innovation provides a unique opportunity for value creation. As we covered here on this channel, especially with AI, right? Especially with AI, like everyone is doing AI now. Like everyone has some flavor of AI, but what's really going to separate, kind of the, what was it? Separate the chaff from the wheat, I suppose, is going to be the value add aspect, right? You can go on almost any AI platform and just prompt it, ask it questions and things like that from an end user perspective, a really basic end user perspective. And from the front end, it all kind of looks the same. You ask it questions, it spits out an answer. So the value creation is going to be a big part for new AI companies going forward. And since Strategy, or MicroStrategy, formerly known as, is now throwing their name in the hat for AI, this is going to be a very, very interesting year for Strategy and for MicroStrategy. All right, so let's move on to what they're, from their investor relations page. We covered this in a live, and we covered this in a video labeled MSTR in Trouble, right? We talked about this. So the world's first and largest Bitcoin treasury company. We are a publicly traded company that has adopted Bitcoin as our primary reserve asset. By using proceeds from equity and debt financing, as well as cash flows from operations, we strategically accumulate Bitcoin to advocate for its role as a digital capital. All right, so real quick, let's talk about what this actually means. So equity. So when they issue stock, and they're not just issuing stock anymore, they're also issuing fixed income instruments, right? Which we'll get to in just a moment. But they're using, when they issue out new common share and you go out and buy the stock, MSTR, whatever proceeds they make from the equity or from the issuance of debt, they're using that to go out and buy more Bitcoin. And they were on a huge tangent of buying Bitcoin almost every other week. They had like 11 consecutive weeks of buying Bitcoin, so they were not stopping. And true to what they say, to what Michael Saylor has said, he's going to continue buying Bitcoin, right? Debt financings. So they take out debt, they use that money and go buy more Bitcoin. And we'll again talk about the debt that they are issuing, as well as cash flow from operations. So again, MicroStrategy, or Strategy now, they have two businesses. One is strictly an investment firm, basically an investment firm for Bitcoin, right? So large institutions, funds, wealth funds, these types of funds, these large investors that can't have crypto on their balance sheet, what they're going to do is instead just go straight to Strategy. They're going to go straight to Strategy, buy Strategy common stock or buy Strategy fixed income instruments, and that will get their indirect exposure to Bitcoin, while also making some type of yield, either a dividend yield or something else, right? And then MicroStrategy or Strategy, what they're going to do is take that money and basically go buy more Bitcoin. Funds from operation. So whenever they make a sale or have a profit of, money from their sale of software or services, they basically use that profit and buy more Bitcoin. So any way that they can get their hands on money, they're going to go out and buy Bitcoin. So that, I just hope that covers that, extremely well. Our treasury strategy is designed to provide investors varying degrees of economic exposure to Bitcoin by offering a range of securities, including equity, common stock, and fixed income instruments, i.e. Debt or preferred shares. In addition, we provide industry-leading AI-powered enterprise analytics software, advancing our vision of intelligence everywhere. So again, this is going to be really interesting, and we keep harping on this channel, especially about the whole AI thesis and deregulation of crypto and AI. So again, MicroStrategy, i.e. strategy, is going to really bridge that gap. You're getting the best of both worlds. It doesn't mean go out and buy the stock, all right? It doesn't mean I'm advocating that you go out and buy the stock. This is just a dive into strategy. We leverage our development capabilities to explore innovation in Bitcoin applications, integrating analytics expertise with our commitment to digital asset growth. We believe our combination of operational excellence, strategic Bitcoin reserve, and focus on technological innovation positions us as a leader in both the digital asset and enterprise analytics sector, offering unique opportunity for long-term value creation. So that's a pretty big word salad, not gonna lie. Yeah, we kind of already covered all of this stuff. But yeah, this is directly from their new, investor relations page for strategy. So if you go up here, you can buy some merch. So if you're a big strategy fan or MicroStrategy fan, which, honestly, they're starting to win me over, maybe I'll go buy some merch. They have their software now, right? So when you go to strategy.com or microstrategy.com, you're going to just see this page. But also, they split their business in two. So you have the investment side, which is strict Bitcoin, investment, and then they have the alternate side, which is their software. Nothing else has really changed. They have their Strategy World 2025, which I haven't really looked at, but let's look at software. So this is their software page. Okay, they have their MicroStrategy One platform, or their Strategy One platform. It's a combination of AI and BI, artificial intelligence with business analytics. And business analytics is basically a software similar to like what Palantir might have had or has. And it basically just takes raw information and turns it into data that's readable for like humans, that's readable for us, right? So that's basically what they do, but they do it for businesses. Whereas, Palantir is working with the intelligence agencies, and they basically take raw information and help them come to like conclusions about what they, they should do or how they should act, basically. But yeah, these are their core features. Nothing really has changed from the last time we spoke about strategy or MicroStrategy, but it's just interesting to know that they basically cut the company in half. And now there's, the other half focusing on investment, focusing on institutional investment, focusing on Bitcoin, Bitcoin app development, and then you have the other side, which is still going to continue with all of their regular business stuff, right? So this does look interesting, but again, as you really look under the hood, it tells a different story, and that's the thing we really want to look at, is what's under the hood. All right. So recently they came out with their earnings, which came out 4 p.m., 5 p.m. Eastern Standard Time. So Michael Saylor, got on the horn with other investors, and they basically announced their earnings. Right? How are they doing? So all this is nice, all the fancy Bitcoin stuff, all the fancy AI stuff, business intelligence stuff, the software suite, all of that is super nice, but how is the company actually doing? And this is where we're going to look under the hood. Okay, so this has not been updated as of yet, right? So I just want you guys to know this. So this has not been updated, but just since September of 2024, which was their last earnings, we could still see that they've been going down, right? We've covered this already. They've been going down. They've been losing money on their software suite. Not much has really changed. You can see it's just progressively been getting worse. If we start from December of 2023, it's just been getting worse and worse year over year, month over month, quarter over quarter. It doesn't look like it has improved. So how did they do on earnings today? Well, we could take a quick look, and a article published by TipRanks, MSTR earnings, MicroStrategy misses estimates, but introduces new KPI and accounting method, which is, again, going to be weird because they have Bitcoin on their balance sheet. Okay, Bitcoin is going to be a huge part of their balance sheet. if we look at MST, this actual stock, right? If we just take a quick look, you see these spikes, right? You see this pattern, right? Since 2021, and then you got this. Well, you know what else also looks like this? It's Bitcoin. Bitcoin also looks like this, right? You see that same exact pattern. So we can surmise that MSTR's price is directly tied to Bitcoin. Okay, so with their new, and I covered this on an earlier video, but basically one of the bigger challenges for MSTR is going to be that whole tax situation. That still has not been settled. I have not found anything public about it, but apparently because, of the Inflation Reduction Act of 2022 that was passed by the Biden administration, taxing large companies, on what was it? Anything over $1 billion, I think. They plan, or anything in $1 billion, they want it on their investment or something like that. They want to basically tax their capital gains. So MSTR holding a sizable amount of Bitcoin, they want to tax them. They want to tax MSTR on the Bitcoin holdings without them even selling, right? There was a letter that went out. It was between Coinbase and MSTR to the Treasury, basically asking, hey guys, can we get an exemption? I have not found if that was accepted or not. So if it has been accepted, I'm not aware of it, but we can, quickly just take a look. Well, first, let me finish this segment. So again, how is MicroStrategy doing as far as earnings? So shares of MicroStrategy, MSTR is down by 3.3%, now rebranded as Strategy. Little change in after-hours trading after the analytics software company better known as for its massive Bitcoin holdings reported earnings for its fourth quarter of fiscal year 2024. Earnings per share came in at negative $3.20, which missed analyst consensus of only 0.09 cents per share. All right, sales decreased by 3.1% year over year, with revenue hitting $120 million. This also missed analysts' expectations of $122.45 million. However, investors are likely more interested in the company's Bitcoin, and that is a fact. All right, that is a fact. So more and more companies are now just interested, or more and more investors, I should say, are interested in MicroStrategy for this. For them being a Bitcoin treasury. So really quick, let's take a look at some of their other stuff. So they had, let me see if I can find it. Dang it, I just saw it too. But they had, let's see if I could do this. Yeah, there we go. That's the actual webpage for strategy.com. This is the actual this is the actual webpage, right? They have the share price, they have Bitcoin, they have their debt instruments. So these are convertible notes that you can actually purchase. I don't know if retail investors can purchase this or not. I know for most companies, whenever they issue out preferred shares, you're allowed to call your brokerage, depending on the brokerage, Vanguard, Fidelity, Schwab. I know they offer preferred shares. I don't think Robinhood or M1 Finance or Webull does, for that matter. But you can call these brokerages and say, hey, I want to place an order for, MicroStrategy preferred shares, ticker, whatever the preferred share is, right? And these are the preferred shares. These are the convertible bonds, right? Or the convertible notes. So basically, when you buy one of these things, they're going to say, hey, we're going to give you a yield. And MicroStrategy, what they do is they take this money that you just invested and they go buy more Bitcoin, right? So if Bitcoin goes down, I'm curious what's going to happen to a lot of this stuff. I have no idea, but I'm just curious, right? And these are convertible, 2027, 2028. Basically, they'll call the debt, they'll pay you out. They'll stop paying you a dividend yield. They pay you out, they pay your money back, and then, whatever's left is theirs, right? Basically, if Bitcoin goes up in 2027, they make a profit. Same thing for 2028. If Bitcoin was to go down and, they convert the note, they're going to be taking a huge loss. So depending on what happens, we'll see. For assets, they have a lot of Bitcoin. Again, they have a ton of Bitcoin. I think they have like some 440,000 coins or something, like full Bitcoins. So we'll see how that works out. They actually have a little under $40 billion in Bitcoin. So we covered this where they might owe, I think $8 billion worth of Bitcoin capital gains. That's why they're pushing for the Treasury to give them an exemption. which is funny because the company makes no money. So how the hell is this company supposed to pay off that debt with no money? They'd have to sell the Bitcoin, right? And if they sell the Bitcoin, that's going to drop their stock price tremendously, right? That's going to screw a lot of investors. So this is why they're really pushing hard for the exemption, right? Really pushing hard for that exemption. If we continue, you got yeah, they just push their charts, which is kind of interesting. Again, this is a nice website. I'm not gonna lie. Yeah, they got the history of this price. I don't even know what these are. These little dots. Oh, okay. This is when they bought Bitcoin. Oh, wow, that's interesting. I didn't know that, but that's pretty cool. Yeah, acquisitions of Bitcoin. That's cool. All right, yeah, here's their actual purchases of Bitcoin. So they make this public. I like this transparency. I'm not going to lie. I really like this transparency. It makes it so easy to just kind of look at MicroStrategy or strategy and just see what, what their cost basis of Bitcoin could be. They did note it. I'm not sure. I did see it, but they did note what their cost basis is. Oh, right here. Yeah. So out of the 471,000 Bitcoins they have a average Bitcoin cost of $64,000. $64,000 on each Bitcoin, right? And Bitcoin right now is sitting at $97,000 a coin. All right, let's just do some real quick caveman math here. So out of 471,107 times 97,101, yeah, they have 45, was it? Hundreds, thousands, millions, billions. They have $45 billion, almost $46 billion in Bitcoin. And this is fluctuating every single day because it's fluctuating with the price of Bitcoin. That is wild. That is just so wild. But yeah, again, the company is doing bad. The actual company is doing horrible. So that's just wild. That to me is just absolutely crazy. It's just crazy to see something like this. But yeah, we'll see if this is a good strategy or not. And then you could check their notes. They talk about their KPI, their new reporting methods and things like that here, which is something I didn't have a full chance, I guess, to actually go through, but something I'm definitely going to take a look at. So if you're a big fan of Michael Saylor or a big fan of MSTR or strategy now, this could be very interesting and a very interesting play for you. There's a lot of investors, especially in this community, that have MSTY, that invest in MSTY, which is the Yield Max strategy option income ETF from Yield Max. So again, this is all this is all interesting. That's all I can really say about this. Okay, so to bring it down a bit, let's move on from this segment. All right, let's move on. I think I touched enough on strategy. They got a whole 23 minutes of my time. Let's move on. I hope you guys are enjoying this. Hit this like button if you guys are enjoying this content. Please hit the like button. All right, let me know if you guys are enjoying this too. All right, so we also had some other news come out, and this is interesting. I woke up to some really interesting blips on my feed, but this one really took the wind. All right, so we're going to listen to it.
Now, Trump critics say he always wants lower interest rates, and he always wants a cheaper dollar. Do you have a riposte to that? Or maybe that's true, or what do you think?
Larry, the president wants lower interest rates. Mm-hmm. And what he sees, in my talks with him, he and I are focused on the 10-year Treasury, mm-hmm. and what is the yield of that? So the purpose of lowering interest rates is to lower interest rates. The Federal Reserve, and I will only talk about what they've done, not what I think they should do from now on. They did a jumbo rate cut, and the 10-year rate went up. Right. Now I've seen this year, despite the growth estimates going up, 10 years coming down, because I believe the bond market is recognizing that, as you and I talked about, energy prices will be lower, and we can have non-inflationary growth. We cut the spending.
All right, so real quick, guys. Scott Bessent is headed for the Treasury, the Secretary of the Treasury. So again, he's going to be the one that's going to be signing off on that letter that Coinbase and MicroStrategy sent, to the Treasury, basically asking for exemption. Besson is very I'm not going to say pro crypto or anything like that, but I will say very, as a secretary, he's going to be very favorable for the crypto industry. So I can already see that he's going to sign off and give, the exemption off to Michael Saylor and Coinbase as entities that hold a lot of Bitcoin without taxing the whole capital gains thing, which I think is foolish anyways. Like I get the whole using that money to basically bring down deficits, blah blah blah, social good and all that other stuff. But to actually tax unrealized capital gains is ridiculous, because it's just one step away from taxing US citizens, retail investors, you and I, on unrealized capital gains. Imagine you held a stock for 10 years, it 10x, right? You had $1,000, it's now worth $10,000, right? Imagine getting taxed on $9,000 and you didn't even sell that stock. Like, it would be ridiculous. I personally wouldn't even support something like that. Even to do that to companies is kind of ridiculous in my own opinion. But again, we're not here to get into politics. We're just here to kind of cover the meat and potatoes of it. All right. So here's what we go. So he just talked about bringing down, like the Trump administration is focused on bringing down not just interest rates, right? Because as we just learned, the federal funds rate does not really influence mortgage rates or borrowing costs. So what Besson is saying is that they want to focus on the 10-year treasury. That was like music to my ears. And he's going on to say that, they're working on policy that's not going to create inflation, but continue to drive it down, right? So the whole tariff thing, I think we can really just throw that almost out the window. We got to wait how these next couple of days or these next couple of weeks play out, especially with the whole China-US tariff thing. Excuse me. So we have to just keep an eye on what's going on, right? This presents a great opportunity, especially for REITs, especially for real estate. I'm going to kind of put the real estate segment a little further up, right? But this will affect the other markets as well. But for real estate specifically, this is music to any real estate investor. That 10-year coming down would be crazy, would be great, because you're going to have a wave of refinances coming into the market. A lot of investors want to refinance properties. In the commercial real estate sector, I covered this earlier, there's like $500 billion worth of loans coming this year, right? Almost $500 billion coming due this year in loans. And this whole extend and pretend thing is not going to work forever. So by bringing down the 10-year, that is going to really, really cause some positive ripple effects for the real estate industry. They'll be able to refinance loans, get out of bad debt, continue, getting properties stabilized. For regular people like you and I, the retail investors, or even just homeowners, people who want to be homeowners, if that 10-year comes down, mortgage rates will go down, which will cause a buying spree. Regular people who wanted to buy a home will now be able to buy a home without a huge interest rate tied to that mortgage. So this is this was music to my ears. I was waiting on this. I'll get back to you guys in the comments. Appreciate you guys. I definitely see. I am seeing your comments. All right, guys. I just don't want to stop the news segment right now. But yeah, this is going to be huge, right? So we take a look at the 10-year treasury and we see that it had a massive, massive dip, right? It's just been going down. It's finally under 4.5%. It's been at 4.5 and above that for so freaking long. And now it's finally coming down, right? Ever since December, basically, again, REITs, rates up, REITs down, rates down, REITs up, right? That always rings true. That is like the favorite saying of REIT investors. But as we could see, the 10-year has finally went down, right? It's been going down. Hopefully it continues to go down, but we got to see how policy is going to react, what new policies are going to come out. We got to see what's going to happen with the whole tariff war. Canada and Mexico, our biggest trade partners to the north and south of us, they're going to meet the demands of the United States. They're going to place troops at the border to stop the fentanyl from coming in, and we'll just not do tariffs, which is great, right? That's great for everyday Americans. It's great for everyday consumers, right? And that's great for the stock market. That's great for the U.S. 10-year treasury, because again, the institutions that are loaning out this money, they were under the impression that all these tariffs that were, being announced, or all these tariffs that were being talked about, was going to create inflation in the United States, which leads to the Fed, which leads to the Federal Reserve. The Federal Reserve, at the last meeting, they said that they were going to wait and see what happens, what happens with the Trump administration, if they're going to implement these tariffs or not. They modeled the tariffs into their inflation, or into their interest rate projections, whether they're going to stay or rise or cut. They're modeling all this stuff. But as the waters become a little more clear, as the waters become a little less muddy, we're seeing that the tariffs, I think, was more of a leverage tool, with the exception of China, which China is not, taking the knee. They're definitely not going to just take it on the chin, for sure. And they're going to, basically balk back and say, all right, you're going to tariff us. Well, we're going to tariff you as well. So we'll see what happens. But anyways, 10 years going down, which is a good thing. So let's look at how the real estate sector, or the REIT market, took it. All right. This is a huge jump. Pretty big jump, especially all things considered, where it just kept going down. This was, what was it? Yeah. Into December timeframe. Like it was constantly going bad because, again, the whole tariff thing and inflationary, policies. So, thankfully we're moving past that now that things are getting a little more clear. So it was nice to see that the REIT market is rebounding, which, for my own personal portfolio is a good welcome sign. And not only that, but this, right? Again, seeing the 10-year treasury go down, big deal. Because again, as a real estate investor, I'm invested into a couple different real estate projects, and we're all just kind of like on edge, waiting to see what's going to happen with this 10-year treasury. So knowing this is quite a big deal. So, hey guys, if you're enjoying the stream, please smash that like button. I really do appreciate it. Subscribe to the channel if you're not. All right, so let's move on real quick. This is news that came out just a few days ago, and I just read this article. But basically, Fed Vice Chair Jefferson advocates remaining cautious on rates as policy drama unfolds. Again, this is just reinforcing the fact that the Federal Reserve is kind of doing a wait and see approach. They want to see how this is going to shake out with tariffs. How's this going to shake out with whether future policies are implemented that could raise inflation. Or how it's going to affect the job markets or whatever. So again, we have to just take a wait and see approach. We shouldn't try to guess, but we definitely should be pragmatic in how we do our investing, right? We should be pragmatic. Being patient is better than just YOLOing your cash in something and hoping for the best, right? Betting on interest rates is not a good strategy. All right. Let's remember that. But basically, Vice Chair Philip Jefferson said Tuesday the central bank should be careful how it adjusts interest rates in an uncertain policy environment. Again, we kind of already covered what the uncertainty was. Just like the last administration, just like his first administration, the current sitting president is very, I don't know how to say it, but I'm not gonna say boisterous, but he says a lot, right? He says a lot. It drives people like left, and really he ends up going like right. Like it's just crazy how our president just says a bunch of stuff. And the market, because the market is so forward looking, the market is very emotional. Investor sentiment can change like at the snap of a finger. The market's been going crazy. The market's just crazy on how it's handling the news like every single day, right? So again, we should just take this wait and see approach and see how things pan out over these next 30 to 60 days. In broad terms, the Fed governor sees the economy strong with inflation easing back on a bumpy road to the central bank's 2% goal, and a labor market is in a solid position. And again, for those who don't know, the Federal Reserve has a dual mandate: price stability, maximum employment. All right. So that's what they're going to focus on. That's what they're always going to focus on. And they have all these tools available on their tool belt that they use to basically ensure that, they reach those two mandates. All right. And that was pretty much it. Principal among the current level uncertainty is the impact of the tariff negotiations between the U.S. and primary trading partners. There's always a great deal of uncertainty around any economic forecast, and currently we face additional uncertainties about the exact shape of government policies as well as their economic implications. So again, we kind of already covered all this. So you always want to keep your ear to the ground. You always want to know what is happening at a macro policy level, especially with regards to the United States and how it's doing its basically policy, how it's influencing the economy, what it's doing for tax cuts or tax hikes or whatever, right? You just want to always keep an ear to the ground, because this will help you kind of think a little further. This will help you think a little deeper about how you should invest your money. So all good stuff here. All right, so how did the markets react to basically yesterday's or today's news, and just react to everything else, right? So we have the S&P 500 up 39 basis points, so in the green, so we're happy there. So it's been doing good over the last couple of days, and it had a huge drop. This was primarily due to the whole DeepSeek scare, and then as we recovered, this is earnings week. So a lot of companies are reporting their earnings. Several companies, several notable companies are in the green. They reported positive earnings growth. So this has been driving the S&P 500 to continue to climb. Along with that, we have the Nasdaq, which is a tech heavy focused ETF with, I think, and I keep saying this, I really should check what the what QQQ is, but basically it's a tech heavy ETF. We see that they're in the green at 42 basis points, and again, most of the tech companies are starting their earnings this week, so that would account for this. How's Bitcoin doing? We always got to look at the 5-day, because by the time I click on the 1 day, like it's already restarted. So I have to click here. It's been trending downward, which is kind of weird. And again, I'm not sure why. Don't understand why it's been trending the wrong way, basically. But yeah, even like right now. Yep. Even right now, it's just been trending down. So curious why that is. Must be investor sentiment. I think it's just probably investors just maybe moving their money into probably tech stocks or something. I have no idea. Not gonna guess on this one. All right, let's take a quick look at gold. So gold had a green day today, 62 basis points, and again we could see that just over time it's been increasing, and again, investors invest into gold as a hedge against inflation. So maybe there's some market sentiment there that China is definitely going to balk back, and we're going to have probably a trade war with China. So I would probably guess that, based on, and again, this is all guessing, but based on this is the reason why gold is continuing to increase. And this is the Spider Gold Trust ETF, ticker GLD. All right, this has a spot price against actual gold. So we just use these. We use these, especially for any newcomers. We use these indexes as weather gauges. Okay, these are weather gauges to just kind of gauge how the market overall is doing. So the S&P 500 is basically the 500 largest companies in the United States. The Nasdaq is primarily a tech-heavy focused ETF or focused index. So, whenever tech has bad days or bad weeks, the Nasdaq 100 is definitely going to reflect that. We use Bitcoin as kind of, again, the weather gauge, the thermometer for cryptocurrencies, because I don't care what anyone says. When you are investing into Bitcoin or when you invest into these other altcoins, a lot of time their price is tied directly to Bitcoin in some way, shape, or form. If Bitcoin drops, freaking the other altcoins drop. All right, it's just a fact. All right, I could be wrong. You guys can throw a bunch of different coins at me, but from what I have seen, from what I've saw, whenever Bitcoin goes down, so do all the other major coins. So, and then again, we just use gold as kind of another thermometer. All right, so to wrap this up. All right, to wrap this segment up, let's take a quick look, because these are one of my holdings. This is Avalon Bay Communities, which is a real estate investment trust company. They raised their dividend by 3%, which is a nice welcome change for me, because I do like getting little mini pay raises from my holdings. So this was nice. But yeah, that will do it for this segment, for this financial news segment. Gonna take a look at the comments here. All right, so we have It's a Wealthy Life. Hey, Dan, welcome back. Feels like a 2000 bubble. Yep, 2000, 2001. Yeah, I definitely can see it. There's a lot of euphoria in tech right now, like a lot of euphoria in tech and crypto. And I think it's for good reason, again, because the environment is so favorable for both crypto and AI slash tech. So I think this is all good. It's especially when you have an administration that's backing it, right? Backing it. You have the entire economy that's backing it. I think this is good. I think this is it's not quite a bubble. We'll find out in 3 years if it's a bubble, because then yeah, we'll have a whole new administration coming in. Elon and government, yeah, Doge, the Department of Government Efficiency is going to crash Bitcoin. You really think so? I don't think so. I'm a little iffy on this one because, and I say that because Elon is very pro crypto, and the whole thing with Department of Government Agency is to reduce the deficit, or reduce basically the overbloatedness of the federal government, and that can be seen because the federal government just announced not too long ago that they're giving employees who are working from home an option. They can either return to the office, or they can take a severance package where they'll pay them up to September 9th or something. They'll get full benefits and they'll be able to basically be released from the federal workforce. So I don't think that Doge is going to crash Bitcoin, in my opinion. Just my thoughts. I could be completely wrong. Fun fact, I did just speak to a community member not too long ago. He works for the federal government. He works in Germany. And he was telling me that he got that offer because he works from home. I forget how many days out of the week, but he actually works from home, and he got that offer to say, hey, you can come back to the office starting immediately, or you could take the severance package. You'll get 9 months off, full pay and benefits. And yeah, and like, dude, that is a deal of a lifetime. I would take that. I would 100% take that without even second guessing it. Especially if you want to pursue maybe college or maybe certifications, or maybe you want to even change careers, or even if you just want the freedom to go travel. Like if I had 9 months of paid leave, I would hop on that in a heartbeat. Like the career can wait. just my opinions on all of this. But yeah, that was just crazy, man. I thought that was crazy. Let's see. Going more into the comments. Let me just go back here. Makes the screen look a little nicer. Danos, hey, welcome back. See, Jeff, I saw that, Jeff. You retracted the message because you knew you pasted your crypto keywords in there. I know you pasted those secret keywords in there. Danos, yeah, welcome back, man. Always a pleasure. I would have to sell 50% of my Tesla position from Wealthy Life to pay for the gains. Yeah, exactly. Like in order to pay for like that capital gains tax thing, I think that was so stupid. Like that, thankfully it's not going to affect, everyday investors, everyday retail investors. But man, just the fact that they even offered to put that on the table was ridiculous. And of course they wouldn't come after retail investors. Why? Because all of Congress is retail investors. They don't want to hurt their money. Instead, they're going to hurt the company's money, right? The big company's money. They want to go after them. This is why Nancy Pelosi is like the best trader in the world, because she always has insider information. Which, you know what? Let's cover that real quick because this is interesting. There's a ETF that tracks Nancy Pelosi's trades, not in real time. Like they're usually, I think, like a month off or something. Where is it? Yeah, Nancy. This is crazy. Like, I think this is so funny. She's the best trader in the world. Like, look at this thing. Yeah. And then you have another one. You have the inverse Kramer ETF, which I think is also really funny. Because, Kramer, I think as a person, he's a good person. He has good intentions, but a lot of his stock picks have went, backwards. Yeah, he gets a lot of hate. He gets a lot of hate and a lot of flack from the finance community for sure. Yeah, we can look at this one, inverse Kramer. They basically, if Kramer says go long Google or buy Google, they're gonna short it, or they're gonna just take a different position against it. Yeah, like I think it's just funny. Yeah. Anyways. So Danos asks thoughts on TLT or TMF. I know this is a 10-year treasury. TLT is a treasury. Let's take a look. Why not? So we'll look at TLT ETF. Oh, it's a 20-year treasury. Excuse me, guys. It's like really cold in my room. I got the AC on and freezing over here. The iShares 20-year treasury. I liked this treasury. There's another one called SGov. I like TLT. Very low expense ratio. All things considered, it is actually a pretty decent ETF if you want to just hold cash. So I know we always talk about like if you hold cash, if you're a little cash heavy, you know, what should you do with that money? And I think putting your money into something like a treasury, something like SGov would be great. This is obviously way shorter. But if we look, you know, you got a 5% yield. I think this is going to be dropping probably very soon. It pays monthly and it's very low expense ratio. So actually really attractive. This is if you're just holding cash, right? If you're just holding cash, you're not doing anything with it. You don't want to put it in a savings account. I think this would probably make a little more sense. If we look at TLT, yeah, how it's going to perform probably in the short term is I'm not too sure, to be 100% honest. It has a little bit of a higher expense ratio, which is never good. And it pays a lower dividend yield, obviously, because it's a 20-year. So I don't know. I don't really have a good thought of it. I don't really have a bad thought for it. I would honestly opt for SGov if it's going to be a shorter term play. Like if you just need to store some cash until you make a purchase, I would probably put it in SGov. You're going to make some dividend income. It's going to pay you monthly. You're going to pay less, a less expense ratio. You also mentioned TMF, which I think I've covered. I think I covered this one before. Oh, this is crazy. Let's take a look at this. Danos, this is why I like you, man, because you're just crazy. The fund is managed. Okay, it invests in fixed income markets in the United States. The fund takes long positions to invest directly and indirectly through exchanges and swap agreements in the fixed rates. That's okay. Yeah, why not? Let's take a look at it. Yeah, I mean, I always take a long-term look at things just to see how the share price has been doing. Obviously, you guys can already kind of guess I wouldn't put my money in something like this. That's a high expense ratio. Hell no. That is a high expense ratio. Hell no. Hell no, I would not put my money in this thing. With this kind of yield, and it pays quarterly, man, you could get a better return from SGov. All right, you can get a way better return from SGov. I don't know, like I don't have bonds or treasuries in my own portfolio, but I know for a fact I wouldn't put my money in TMF. That's a fact. Like, don't worry about these volatility, guys, these spikes. And I'm not saying buy it, all right? Let me just be clear about that. I'm not saying go buy it. But if you even look, like the price does not really fluctuate that much. All right, you're still within the 100 range. It's a very stable asset. So if you're just looking to park money for the short term and you just want to make some, some interest, some dividend yield, go with SGov is my recommendation. You're going to pay a much lower expense ratio. It's going to pay you monthly. You can keep the money in there. You can liquidate it if you need it in a pinch. I mean, if you look at the assets under management, $32 billion, all right? $32 billion. So in case you need to sell out of it, you have the liquidity. You won't run into a liquidity crunch, right? If we compare this with TMF, yeah, 5 billion assets under management. Okay, that's pretty good. That's not bad. No, I'm not gonna even front. That's not bad. TLT I think has a larger one. Yeah, 52 billion. Yeah. I would go with SGov. I hope that addresses that, as best as I can, Danos. Hope that was at least insightful. If It's a Wealthy Life says the economy is so soft right now, the Fed will chase the 10-year as usual. Well, they have to. Like the federal funds rate has been going down, right? And we talked about this several times too. The federal funds rate has been coming down like it should. But we have to, like, not we, but the administration has to start attacking where the pain really is, right? Because you have so much real estate debt coming due, and you have borrowing costs that are pretty much putting a lot of pressure on like home builders. How can home builders build homes if costs of construction go up, if costs of taking on debt goes up? Like they're not. And right now there is a national housing shortage. All right, yeah. I can go on and on about that stuff. But yeah, let's take a look at this real quick. Trading economics. Yeah, we take a little look a little farther out. Yeah, like this has to come down. Absolutely, this has to come down. Dano says after watching the Kramer video that they can manipulate the market, the guy is horrible. Yeah, I mean, I don't know which video you're referencing, but they absolutely, when I say they, I mean large institutions, large banks, right? Because in case you didn't know, banks like JP Morgan, Citibank, I don't know, any other, probably Bank of America, they have trading floors. They have these trading floors that just trade all single day. This is like high tempo, high intense trades. They're fighting you. They're fighting you as the retail investor. They're fighting the public retail trader, right? There's a quote out there that when I read this thing, I was laughing my butt off. But basically, it goes like, traders are nothing more than equity for institutional investors, right? Like that's how they treat the retail trader. They're just equity. Like basically, what they're saying is that they're paying their paychecks. So because they're losing all their trades, whereas these large institutional traders, these big banks, these big hedge funds, all these other funds out there, they got like the cream of the crop, right? Yield Max, you have Yield Max, you have people like Yield Max. I'm not saying they're one of them, but you have people like Yield Max, you have people like Amplify, you have people like Roundtree, one of those, whatever. But you have these guys who hire these fund managers, and these are like expert traders, right? They're doing their cover call options, they're doing the best that they can, obviously, right? But you, as a retail trader, are probably not as versed as some of these big dogs, some of these really, really big dogs. So yeah, these institutions, they can absolutely influence markets. They get insider information before you get it, right? That's why there's a whole law against insider information, right? People doing trades and then like on the cusp of an announcement from a stock or a company, maybe negative, right? So yeah, institutions can absolutely influence markets, and it is a fact. But not only that, I mean, aside from institutionals, influencing markets, I mean, you have within our own government, people doing insider trading, people influencing the market. So again, this is why you always have to keep an ear to the ground. You have to just be aware of what's going on at a macro level, at the political level. And you can kind of surmise or take a best guess of what they're going to, when they say something, how the market is going to react. This is why you should, again, just keep an ear to the ground, keep these little data points here and there, right? Dano says, thanks for the SGov. I was parking money in USFR. So I'm not familiar with USFR, but we can take a look. I never heard of USFR. Worm tree. Oh, wisdom tree. That was worm tree. So this isn't bad. Aside from the expense ratio, that's a little higher. You still get a pretty decent yield, and it does have 17 billion in assets under management. So this is a really good one. Yeah, I would consider something like this too. What was this? That's crazy. And it looks like it's been exceptionally stable. This would definitely be something I'd be interested in. Very stable, doesn't really go up or down. Your money's going to be worth whatever you put in, plus the 5% yield, and it pays monthly. Like this is really good. I like this one. The fund is co-managed by Wisdom Tree Asset Management and Mellon Investment. It invests in fixed income markets in the United States. Okay, yeah, like I said, this is a decent one. Yeah, guys, we're pretty much at the top of the hour. Let me just take a look at the poll here because I was curious what everyone might have thought about this. So 8 p.m. Okay, so 8 p.m. works. All right, we have one person for any time. All right, excellent. Yeah, I was just curious because, and that was out of 11 votes. Yeah, I was just very curious because, I start to see, especially at the top of the hour, a lot of people start coming in. So I was really curious if 8 p.m. Eastern Standard works for everybody. So again, I want to make sure that I'm reporting the news to the widest audience as available, and it makes sense for everybody. So that's good. So yeah, it's a wealthy life says, damn, I like that one. Hell yeah, Danos, thanks for the recommendation. That's a really good one. Yeah, I think USFR is just as good as SGov, depending on which one's available to you. Again, just it really comes down to expense ratio. I would go with SGov just because of the expense ratio, but I do like the stability that USFR, where is it? USFR has. I keep wanting to say USSR, like the Soviet Union. That's what it reminds me of. But man, that was awesome. That is awesome. I like that. All right, guys. Well, I don't have anything else for you guys. I don't have anything else to talk about. The biggest news was strategy. That was the biggest one today. I think I might be doing a separate video on this update, which will just, again, kind of go over everything we just covered in this live. But I think I'll do a separate video on this one because this one is definitely a hot topic. And I plan to do, what do you guys think about doing like kind of like maybe like a company review or a stock review, just kind of diving into it, because I wanted to do one for Palantir. I wanted just to dive into Palantir and kind of just look around, see what it's offering, see what's on the up and up. Aside from just, looking at financial charts all day. What do you guys think about that? Let me know in the chat. And then, yeah, I really I'm so bullish on this stuff now. I'm like really bullish on REITs now. I like I said, I mentioned this in one of the streams that I was waiting for something to happen. And now that I know that the administration is focused on the 10-year, this is like, this is freaking news to my ears. This is like singing gold to my ears. Like, this is great because this is going to be such a tailwind for the real estate market, for REITs in general. All right, guys. Well, I got to get going. I hope you guys really enjoyed the stream. Have I used Palantir for the DoD? I have not personally. No. It's because it's I didn't do Intel, or I didn't do any type of like secret squirrel intelligence. But I mean, it's just like any other software. You can read what it does, on the website. And if you've done anything with big data or analytics, then you kind of already understand what the software is. So my background is IT. So I've been doing IT for a while, and I've explored all this big data stuff. I wanted to get my degree in big data, but it requires a lot of statistics, a lot of like mathematics behind it. So I never got into it. But yeah, business intelligence was all the rage, like in 2008, 2009, 2010. Like, big data was all the rage. You could not be on the internet without hearing something about big data, or even turn on the TV without hearing about it. But now, just like, again, it always comes in waves. Cloud computing. Oh, cloud this, cloud that. We're moving to the cloud. What's the cloud? And then, before that was all big data, big data, big data. And now it's, AI this, AI that, AI. And then it always comes in waves with the tech sector. So what's today's buzzwords is going to be tomorrow's, memory. Like, everyone's gonna be like, oh, you remember the AI craze? Yeah. And that's it. Like, AI is going to die on the tree, or die on the vine, just like every other craze. But all right, guys. Well, I appreciate you all. Thanks for joining. I'm going to take off now. Again, it's always a pleasure to have you guys joining, and it's you guys that make this channel possible. It's you guys that make the support, of this channel. It just helps. It just helps, and I really do appreciate it. All right, guys. You have a good night, good evening, or good morning, wherever you are in the world, and I will see you guys in the next stream.